With the Nasdaq hitting a record high in Nvidia at $4 trillion. Let's bring in Steve Sosnick, Interactive Brokers chief strategist. Steve, what do you make of this, especially against the backdrop of some of the recent moves and momentum that we've seen?
Well, Leslie, to me, I could characterize this market as a combination of MOMO and FOMO. It's momentum. There's also a fear of missing out. I think the Nvidia number is a nice milestone. Once it gets sort of in the public consciousness, these numbers become magnets. So it was sort of inevitable. And I think the character of today's rally, though, is very much of the don't short adult tape variety, because this is a week where we don't have a ton of catalysts. The only catalysts are the ones coming from the tariff talks. And the market has been basically conditioned to look through them or ignore them or look past them because, they're just, it's behooved you to do so, and traders tend to keep doing what's working for them.
Yeah, you mentioned in your note that it's the half-life of tariff reactions has been steadily shrinking. Do you think that's because of the specific announcements coming through? Do you think it's what we're referring to in terms of the psychology and the fact that, now that we look back several months later, we can say, oh, well, if you just didn't sell in April, you would have, largely been okay?
I think it's more the latter. I think again, the lesson that traders are taking away here, rightly or wrongly, is, ignore these because something will come out of them that'll be better. They're never going to be as bad as we want. The July 9th became August 1st, and there were the nasty letters that went out, but there's room for wiggle room. There's room for negotiation in there. So the market is always taking that point of view. At some point, there is a reckoning to be done with here, but the market just chooses not to. And so if you've gotten conditioned to see every dip as a buying opportunity, then at some point you don't even really want to react to sell, because why sell? Because it's going to go up more. This is the I'm not saying this is like the strategy that one should be doing all the time, but this is the psychology that I think is going through a lot of active traders' heads.
What do you think breaks then that kind of reaction function? Is it a rate change? Is it an earnings trajectory change? Both?
I think an earnings trajectory change is very possible. Talk about like no catalyst today. Well, we get a whole lot of them starting next week. And what's very different about this earnings season to me is I can't remember last quarter, where basically companies could say, guidance? I don't know, guidance? What am I going to do with guidance? And the market was like, okay, yeah, we're fine with that. Think of how insane that is, considering what markets have been doing. And it made sense at the time, but I don't know that these companies are going to get a pass this time around.
In terms of pulling guidance or lower, whatever.
They have to deliver. They have to say something. And I do think in some cases, with the lack of clarity, they're not going to be able to just fudge it for a while. They'll probably give if-then statements, like if the tariffs are this, our guidance is this. If not, then something else. But they're going to have to say something, and that's going to be an interesting measure as we go forward.
Yeah, I guess those companies that do have a direct impact or some kind of sensitivity to the consumer reaction to tariffs have to say something. I wonder if the market's just trying to resize the tariff risk a little bit and say, look, the S&P 500, it's 40%, these 8 companies or whatever, 10 companies that don't really matter when it comes to the tariff debate.
That's a large part of it. Is basically we've been increasingly top heavy in our performance. Came on the air talking about Nvidia.
Sure.
It's very much that AI driven trade coming in, and I think to some extent that that is what's moving things higher. But it is important to bear in mind for those who might actually be inclined to hedge that these momentum stocks that are leading on the way up also led on the way down.
Yeah.
And so for those who are inclined to hedge, if you want to hedge a big beta trade, you're probably better off doing it with NDX than you are with SPX, because these stocks, as big as they are in SPX, they're even bigger in NDX. And so you get the extra beta using that.
Yeah, momentum works in both directions.
Exactly.
Good reminder there, Steve. Thank you.